Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Craig S., Mark R., Jackie A., Joe G., and Jeff S. We've got a returning guest on the program today. Mr. Greg Smith has joined us. Greg is the president and CEO of Equinox Gold. The company is in process of commissioning and ramp up to commercial production at its newly constructed Greenstone mine in Ontario, Canada. Equinox Gold is a mid-tier growth gold producer that is focused on production and project advancement in the Americas, with operations in Canada, California, United States, Mexico, and in Brazil. With the successful completion of ramp up at Greenstone, it would mark the 8th operating mine in the Equinox portfolio. Equinox Gold is listed on the New York Stock Exchange under the symbol EQX, as well as on the Toronto Stock Exchange under the symbol EQX. Greg, great to have you back on the podcast. Welcome.
Hey, thanks for having me.
Good to have you back on, and obviously lots of progress since we talked last year. First off, congratulations on getting first gold poured at Greenstone. And of course, an even bigger milestone is coming with project completion and steady state commercial operations. As well as, of course, again, congratulations on the ownership consolidation of the project by Equinox. Well done to the team and the efforts. But why don't we get an update from you on where we are at Greenstone right now and what the market can expect in the coming months?
Sure. Well, you just mentioned the first gold pour, and I was there last week on site for the gold pour, and I can tell you it was a pretty awesome, emotional event at Greenstone in Geraldton. You know, for certainly all of us at Equinox and for the Greenstone team and for all the local community, First Nations, Indigenous partners there. So really exciting time at Greenstone, and was really happy to be a part of it. That gold pour came, has come after a few years here of construction and several months of commissioning, and now with the first gold pour done, we can focus on ramping up production as you mentioned. So right now, both ball mills are commissioned; they're both operating. We're working to get up north of 60% of throughput here in the next several weeks, and then ramp up to over 80% through the third quarter. And that would get us to commercial production by the end of the third quarter. And then, of course, push to get to capacity in and around year end, but certainly north of 90% by year end.
Greg, that's excellent. I think that gives us a good flavor of where this is headed, and things have gone, in my opinion, extremely well. Of course, we're not there yet, but we're very close. And of course, I think this points in part to the fact that you guys have been able to build greenfield projects as well as operate brownfield projects in terms of mines, taking them over and making them work well as just completely constructing them from scratch and improving that up as well. So yet again, another large project checked off here. And of course, we're looking forward to those final things getting finished up here in the coming months. I want to take just a quick step over to it's always good to get your thoughts on how you see the market here, Greg. We're halfway through the year. Mid-tier sector sentiment is interesting. Gold pricing, of course, is interesting. And of course, the little bit of lag there with cash flows starting to flow in with the increased gold price recently. Talk about how you see the sentiment in the mid-tiers. And then do you see the price staying here with gold? Do you see more gains? What do you see in what you're looking at maybe over the next year or so?
Sure. Well, I mean, in the gold equity side, it's been interesting. In some ways, it's been a pretty good year so far for many companies that have seen their share prices increase pretty meaningfully. I think the general sentiment within the gold space would be that we should have a lot more room to run, particularly at the current gold prices. And there's lots of reasons why that might not have happened. I think generally there's just a kind of a lack of interest in some ways globally for the space. Most of what we're seeing certainly is that the usual players are playing, but the generalists haven't really poured in to the gold equity space yet, notwithstanding the higher gold prices. 2022 saw very, very high inflation in the cost structure of every gold company. And that certainly eroded some of that margin increase from the increased gold prices. And that, could be part of what's weighing on the equity valuations. But, recent gold prices have moved up. Inflation has eased. To your point, there's going to be some very substantial cash flow generation coming from the gold equities, including from us. With Greenstone coming on, we've got very high margin ounces at scale that are going to come from that mine. It's going to radically change our cash flow position as well. So I'm bullish, I guess, is the best way to put it on the gold equities. I think there's a lot of room to move here. For the gold price, it's a really interesting situation. And I'm no expert, but you watch what's happening in Asia, and you can see central bank buying from the east. You can see retail buying from the east. You can see all of this interest in physical. And then out here in the west, you've got primarily in aggregate ETF outflows, and you've got fund outflows in the gold space. And so you've got selling in the west, buying in the east. And in the west, you have a strong US dollar, you have high interest rates, and those are usually pretty bearish for gold. And yet we're seeing these historically strong gold prices, in part because of what's happening out east. If we do start to see some decreases in interest rates and some weakening in the US dollar, which I think most people do expect to start happening maybe by the end of this year or into next year, that should be a headwind for gold in the West. So if you have a situation where the buying, and call it de-dollarization or pivoting off the US dollar, continues in the Eastern countries, and you have tailwinds for gold in the West, 2025 could be an amazing year for gold. And there are several banks and commentators calling for that, and sort of making the claim that 3,000 is on the way. And if you look at the gold forward curve, or you look at what a costless collar is today, it's pretty much 2,200 floor and $3,000 cap. That's just amazing. We've had to do a little bit of hedging on this new term loan that we took out for the acquisition of the rest of Greenstone. And these costless collar terms, I've never seen these. No one's seen these in their career. They're just kind of unbelievable. So, on gold as well, I think it's pretty constructive, and I think that we're going to go higher from here.
Appreciate the additional insights on that, because I also align here, and we know it's been a long road. Of course, you and I, we've been here quite a while. You longer than me in this sector, so we know there's going to be these long, tough slogs. But I think we are getting very close here to something that is more substantial, and I think that's resulting here in the price breakouts as well. And so I think it's a matter of time. And then we have some of these other events that are potentially could squeeze it even higher going ahead, as well as, of course, growing geopolitical tensions across the world as well that we're seeing here, which is unfortunate, but nonetheless is going to play into how people look at gold and how they price it going forward. Very good stuff there. I'd like to just get from you an overall operations update. Of course, we know based on what you said there that first quarter 2025 for Equinox will start to show that new profile of Equinox. And of course, the market should start to anticipate this. We will see that new cost profile. But talk about just a general operations update across all mines and how you see the year finishing off here. I mean, we've got 6 months roughly to go. On a consolidated basis, how do you see gold production coming in for the company?
Yeah, we've got, as you mentioned earlier on, now 8 mines with Greenstone coming into production. So a lot, I suppose, to unpack there. With the acquisition of the rest of Greenstone, it now becomes, by far our largest asset, on a consensus basis, over half the company in that asset value. On EBITDA and cash flow as well, it's going to be our largest contributor over the next number of years. So Greenstone, I think, is the mine people are most interested in, and for good reason. We also have, as you mentioned, our 2 mines in California, the Mesquite mine and Castle Mountain. Both of those mines are obviously a lot smaller than Greenstone. Mesquite has been a journeyman for us. Every year it sort of has a year or two left in reserves, and we kind of find another year and just keep mining it. Bit of a complicated mine when you get near the end of the life, when you're sort of doing a bunch of stripping and then recovery, and then stripping and then recovery. As is typical, it's pretty consistent, and I don't expect any significant changes at Mesquite over the year. We're seeing a little bit slower recovery at Mesquite than we have in prior years, but I think that's primarily a function of just the scale of the leach pad at this stage, right? You're over 300 feet, and it just takes a lot of time for that solution to percolate through and for us to recover the gold. Castle Mountain, right now, it operates as a fairly small, almost a pilot plant that we put into production to both maintain the permits and to start the excavation of the historic pits in anticipation of our expansion to the phase two mine, which would increase production from, sort of this 20, 30,000 ounces we've been doing to over 200,000 ounces a year. So it's kind of doing its thing. It's higher cost, but like I said, it's sort of a development project almost masquerading as an operating mine. Where we've really been focused at Castle is on the permitting. And we did have a nice milestone reached here in the last number of months where we finally got the notice of completion from the BLM on our permit application for phase two. That will now set the stage to receive our notice of intent, and we do expect to get that in the coming months. And then once we have that in hand, the official process will kick off, and that would put us into 2026 sometime to receive the permit on Castle Mountain. With that permit in hand, we'd be in a position to then start commencement of construction of phase two, which really is buying a much larger fleet, expanding the leach pads, and then putting in a crushing and agglomeration circuit. So in the meantime, we're going to advance some detailed engineering on phase two. We'd like to get that as advanced as possible prior to any construction decision, trying to mimic what was done at Greenstone so that by the time you're building, you've got very high degree of visibility on what you're actually building. Have that detailed engineering as complete as possible before breaking ground. Moving south, Los Filos, that's our large mine in Mexico, operating as a heap leach operation, but with both open pit and underground mining. It's actually having a great year, and everything's going well at Los Filos. The challenge we have there is it really does need a CIP plant or a mill built on site to process the higher grade underground ore, to process the ore from deeper in the open pits, which does have some copper content in it. So operating it as a leach pad only, currently and in the future just isn't as economically attractive as getting the higher recoveries from having a mill in place. But in order to build that mill, in order for us to make an investment decision in Mexico, we need to completely restructure our agreements with the communities and the unions to create an environment that makes sense to make that investment. And that, operations aside, that's really a focus this year. We're in dialogue with the communities, and we're cautiously optimistic that all parties will come to something that works for everybody, and then we could be in a position potentially to make an investment decision there. And that's something that we're working toward, and we'll have more update on that probably going into the new year. But in the meantime, fiscal 2024, Los Filos is doing great, and we're very happy with their performance so far. Go down into Brazil. Arizona had a great start to the year, exceeded our expectations in Q1. And then just as the quarter ended, we had some ground instability in the open pit. And unfortunately, we had to suspend mining in the main Piaba pit. So we did, and that's, for safety reasons. During the wet season, we just couldn't maintain the mining fleet in there with that instability. So what we've done is we processed stockpiled ore sort of through April. In May, we've started the mining of our new Tatajuba open pit, which is a brand new open pit along strike of the Piaba pit. We'll hit ore in Tatajuba here in June, and then we'll start processing in situ material by the end of the month. So we'll be back into production here at Arizona pretty quickly. The dry season is now upon us, so we'll do the remediation work in the main Piaba pit and hopefully get back into there sometime this year as well. The other thing we're working on at Arizona is portal development to start going underground. This pit wall instability might push us back a little bit, but we're still intending on starting that work sometime this year, probably near the end of the year. So Arizona a little bit challenging here in Q2. We've talked about this on the Q2 call, but we're working to mitigate it and hopefully recover as much of that production as we can going into the back end of the year. At Fazenda, RDM and Santa Luz, they're all roughly or relatively smaller assets for us. Fazenda and Santa Luz quite close to each other, starting to look at what it looks like to potentially integrate those two projects into one. Both of them are on track for the year. Santa Luz had a bit of a rough Q1 where we're still working on recoveries there. It's a it's a bit of a new processing method, certainly for us, not very typical in South America either. And this is a resin and leach process. And so we've been working on increasing the average recovery from that mine. We actually have been quite successful in doing that here in the second quarter. We're meeting our targeted recoveries. We've got some infrastructure improvements coming, deslime circuit, and new trunnion that's going to increase throughput and reduce some of the total organic carbon in the material going into the plant. So feeling pretty good about Santa Luz after Q1 and confident on meeting our targets for the year. And then RDM is our sort of our smallest project right now, and it's also on target for the year. No real issues to discuss at RDM.
Thank you for running through all of them. I think that gives us a good flavor there. And I think overall, I would say things are going quite well. And there's always a few hiccups here and there, whether it be Los Filos in the past there, and then the little bit of issues there at Arizona. But overall, I think this is all stuff that can be mitigated and worked through. And
it's great to have a portfolio of mines because but the challenge is there's always going to be something at one or two of them, right? So you've got that risk mitigation across a larger number of assets, but it does mean you're always dealing with something. Mining is a complicated industry, and you learn pretty fast that a big part of the job is just managing issues as they arise. So it's both good and bad, but as you say, generally we're pretty happy with the way things are going.
And the portfolio approach, I think, works, in my opinion, works best here. And you guys have done a good job structuring this really over a short period of time where we've been able to build this company up to where it is today, which we'll talk a little bit towards the end here. Well, Greg, let's move into capital structure. Why don't you, because we've had some changes here, we've had the consolidation of Greenstone. Where are we now on cash and equivalents, debt instruments, and of course, shares outstanding?
Sure. So this information would be at around mid-May. And at that point, we had completed the acquisition of the remaining 40% of Greenstone. And so common shares outstanding, 428 million in total. Cash on hand was about 260 million. And then our debt drawn, which would be our new term loan, which was 500 million plus our revolver, was just over $1 billion with about 100 million available to draw on the revolver. And then we also have 451 million in convertible notes, of which 140 million are currently in the money. So, an increase in the shares outstanding due to the equity financing and the shares we issued to Orion in the acquisition of the remaining 40% of Greenstone, and then an increase in the total drawn debt also associated with that acquisition of the remaining 40% of Greenstone.
Greg, as you well know, the company has built itself on the back of M&A transactions, proving construction expertise, operatorship, of course, being able to take over a project and operate it well. You guys have been able to prove and demonstrate this continuously here on a couple different scenarios and a couple different examples. But, as Greenstone gets to a steady state in the coming year or so, does increased review of M&A get back on the table given conditions in the smaller junior market and, of course, some of the valuations that we're still seeing there prevail that could make some sense for the company? Talk about that, and do you see that the company would be increasingly active on that front once things settle out here over the coming year or so?
I think it's fair to say we wouldn't rule anything out, but we just completed an almost $1 billion acquisition just a couple weeks ago. So we spent 2 years basically telling everybody that asked if, what are you going to do about M&A? And we always said, well, our number one target would be the rest of Greenstone. And so now we finally have got that done. We've got to digest that. We've got to get Greenstone up and running and operating the way that we know it can. And then, that'll put us back on our front foot and sort of provide the optionality to do more if we so chose to do more. So in the very near term, the focus is going to be on Greenstone, getting it up and running. I think it's fair to say also that we'd like to start deleveraging. So as we increase our cash flow from our operations in this current gold price with Greenstone coming on, we'd look to park as much of that as we can on our revolving credit facility. Maybe we'll get lucky here and have one or two of these notes convert in the near term. And ideally, we sort of rapidly delever the company here over the next year or 2 years. I think that will improve our multiple. Number one, we've moved a big chunk of our production and asset base into Ontario, Canada. It's one of the top mining jurisdictions in the world. It's at an asset of significant scale, and so I think with some deleveraging and really making that asset hum, we should start to see some appreciation certainly in our PNAV multiple and where we're trading. That then gives you the ability and the financial capacity to do more M&A. The challenge is going to be, what do you do? With Greenstone in the portfolio, our sort of profile has really changed. And to find an asset of that sort of scale and quality is extremely difficult. I mean, it's a very rare type of asset, and we would love to have more of that type of asset. But, having been in the space a long time, there's just not a lot of that out there. So, we probably we'll have to get more creative. We'll probably have to look a little farther afield than maybe the usual places. And, we've typically been opportunistic and, managed to find things that we think are going to work for our company and our shareholders. But I think it's going to get tougher rather than easier. Like I said, I think it's going to be a while before we get really serious about that. That being said, we're always looking at our portfolio, always open to optimization, and you never know. Sometimes opportunities come out of nowhere, but in the near term, I think we focus on the task at hand, absorb this acquisition we just did, get back on our front foot, and then hopefully we can start looking from a position of strength.
Yeah, and I think that's a good position to take, Greg. And when you look at the market here with what you guys have been able to do, and the fact that, and I agree, I think that a 2-year time frame to delever, I think, is very, very achievable. And if the market stays where it is and everything goes reasonably well, I think that is definitely something that's on the books. And then if you guys are basically making a standard that you have to look at stuff that's of the size and quality of Greenstone, you're right. It absolutely gets quite hard to find assets that are equal or superior to that. Maybe stuff that's maybe slightly under that size, but you're right. There's a lot of smaller stuff out there, but that's not going to move the needle now for you guys, at least in my opinion. And then, of course, you've got the expansion work, of course, as well. So I think that's a good balanced approach, and I appreciate the comments on that front. With respect to just community work, obviously you guys are dealing with different communities in different countries, but also just one of the things that's pestering the industry continues to be, aside from all the other stuff, whether it's environmental NGOs, issues with NGOs promoting the wrong things in the communities, and just overall bureaucracy and challenges across the board with mining globally. But that talent retention and also competent help is very difficult. So the human resource aspect is getting more and more difficult. What are your comments on that? How's Equinox retaining folks and keeping folks engaged with the right type of education on the importance of mining, and just the overall approach that you'd like to cover off, you'd like to highlight here, just with respect to community work and those related items?
Yeah, it's a really interesting question, and it's a very topical question. And if you look kind of around the world, enrollment in mining specific, education and programs is way down and continuing to decrease, whether it's mine engineers or geologists or metallurgists or whatever the case is. You've got mining schools shutting down, and you've got, historically low class sizes in the space. And that does make it very challenging. It's really hard to find good people. They're in high demand. That even extends to things like heavy duty mechanics, as an example, or heavy duty electricians. At Greenstone, in Ontario, 3 mines went into production in the last year, including Greenstone. You obviously have a fight for talent in that context. We had to go abroad for certain positions just to get skilled labor that you need. So it's really important. I mean, personally, I'd like to see more education at the elementary school and high school level, certainly in Vancouver here, which is a mining center. It's somewhere where we should really be developing an interest and a familiarity with natural resources as early as possible. And there's some good groups out there that are working on that. And it's an area that we've talked about getting more involved in, and it's something we'll be following up on. In the meantime, we support young mining professionals, and I'm a little biased. I am a founder of that organization, and it's a global organization now. It's got 10 or 15,000 members, and it's really designed to provide sort of networking and business opportunities and mentorship for the younger generation of mining professionals. And in the context of YMP, we do support their scholarship program, and we make scholarships available in the mining space in Northwestern Ontario and also in British Columbia. just to try to help folks get through these post-secondary mining programs. And then in the mine sites, we put a lot of effort into training folks from the local communities, whether it's as haul truck drivers or any labor force needs the mines require. We do put a lot of effort in that too. We want to hire locally as much as possible. Obviously, a lot of people in those areas are not skilled, and so you've got to do the work yourself to do that. And in some cases where the government cooperates with us or the local communities cooperate with us in doing that, and we've been pretty successful at it, including at Greenstone, where we certainly made local hiring a priority, and most people that will work at that mine will be from Northern Ontario and from the general region, and I think it's really good. And that mine, Andrew, is really cool to go to because it's got such broad community support. Geraldton was historically a mining town, and I think there's a lot of pride that it's now a mining town again. And it's just great to have a situation where the local population is going to so clearly benefit from it and is so supportive, and that's been really gratifying to see as well.
Yeah, Greg, I appreciate you mentioning that and some of the things you guys are working on and some of your personal initiatives on these efforts. And then, of course, Equinox specific within the different communities within the countries you operate in. From a social health standpoint, I think it is important. And for a smaller town like that to be able to have that type of pride come back into it, have that economic activity, even in these nations like Canada and the US, I think that's so important for the health, the social health of the community, which we know is very poor in some cases, depending on where we're talking about. And so really appreciate the comments on that. And I think that's just, again, a very good thing and very gratifying to have, knowing that there's people working, there's economic activity, there's utilization of local service providers. It just really flows to a lot of other aspects that are really direct and indirect as well. So
Yeah, you see it. You see it on the ground. You see new businesses. You see buildings being cleaned up. You see improvements in housing and infrastructure. The employment rate goes way down, and the community events get much better and sort of much more joyful. It really is. I mean, it's one of the collateral benefits of being in this space and seeing the transformation that can happen in the communities where you operate. And I totally agree. And in Canada, we need more projects like Greenstone, and the economic benefits, and not just economic, but the skill benefits that it delivers to those communities can then be leveraged in other places in the country. And unequivocally, I think it's a great thing.
so much more meaningful, in my opinion, and so much more organic, if I can say that, than some stroke of the pen from a central planner. So I really appreciate your guys' efforts there, and I'm sure the community absolutely appreciates it. And the good thing is this is something that's a long-term commitment, which is, Greenstone's going to operate for decades. It's really good to see this. So I appreciate the comments there. Well, Greg, short of anything else you want to add, it's been a good chat. Let's leave it there for now. And of course, any other comments, but I'll leave you with this question. For potential investors who are listening in, the company has a market capitalization of about 2.4 billion US dollars. Why should Equinox Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
Well, we're still trading at a PNAV, or price to net asset value, at the low end of our peer group, but we do have one of the highest reserve bases, one of the highest growth profiles of any of our peer group. So I think as Greenstone comes online, we should move up that value curve. That's from a valuation perspective. I'd also just point out that with 100% of Greenstone now consolidated within Equinox, Equinox is one of the very, very few public companies in the entire world that has a gold project of that scale, of that size, that is not already owned by a major mining company or a state mining company or a private mining company. So it's a rare asset, it's a valuable asset, and I think over time that'll start to be reflected as well.
And Greg, what is the best way for folks to reach out to the company?
Well, we've got our website, equinoxgold.com, and Rylin Bailey is our VP of Investor Relations. Her contact information is right there on the website. We also are on X or Twitter, or on LinkedIn, and so people can find us kind of anywhere they want to look.
Greg, thanks for taking the time. Really good progress here. Keep it up all the way. Really look forward to seeing that commercial production come at Greenstone later this year, and we'll talk again soon. Thank you.
Thanks a lot, Andrew. Thanks for having me.